Monday the 6th of October, we're an hour away from the opening trade. This is what you need to know. The yen sinks and Japanese stocks surge as Sanae Takaichi becomes the country's first female Prime Minister. French bond futures slide as new Prime Minister Sebastien Lecornu names a largely unchanged cabinet, raising the risk of yet another government collapse. And the data drought continues in the United States as the government shutdown there enters its second week, Val.
Let's check in on these markets. It is positive for global equities. Just check out the move in Japanese stocks overnight, leading S&P futures higher this morning. Euro Stoxx 50 futures just slightly behind, but we are positive. The euro is weaker. This is on the back of a stronger dollar, mostly on the back of that weaker yen. We'll talk about that in just a moment. Those 10-year yields holding in pretty decently, just up 3 basis points, even though those JGB yields rocketed 14 basis points higher in the long end. The countdown to the opening trade starts right now.
Monday morning, good morning. Valerie and Lizzy joining me around the table this morning, and we have a lot to discuss. If you think about the themes that are running through these markets this morning, political instability, top of the list. Look at what is happening in Japan overnight. Look at what is happening in France overnight. Look at what is happening in the United States. A second week of a government shutdown about to commence. There is a lot going on. Politics is leading the narrative, and we start in Japan.
We start with the Takaichi trade out in full force this morning. Look at the yen at an all-time low against the euro. You're looking at it at 150 per dollar right now. The Nikkei at an all-time high. Pricing on a BOJ hike for October down from 60% to 20%. And short-term JGB yields tumbling. So you've got the long end up by 15 basis points on the 40-year. Watch out for that 30-year bond sale tomorrow. And watch out for the spillover into Europe. Goldman Sachs saying if you get 10 basis points higher in Japan, you could see 2 to 3 basis points higher when it comes to Germany, the US or the UK.
Yeah, another economy looking to run it hot. I think that's the big takeaway from this surprise election result out in Japan. Loose fiscal policy, loose monetary policy, and already CPI is above target. What do we see in the reaction? We see gold higher. We see equities getting such a boost this morning. Those Nikkei shares up some 5%, trading at a record this morning.
Is she Liz Truss or is she Margaret Thatcher? That's a question that I think a lot of people in Europe are looking at, trying to figure out whether or not that running of the economy hot is going to deliver a better economy or a bond market freakout.
Surely it's about the timing. How fast does this happen? Because it could be slowly. If you look at all the rhetoric in the campaign trail about trade, talking about maybe renegotiating the Japan-US trade deal, that's been dialed back now. If the fiscal expansion is slow, do you get a bit of a wind back of the market reaction this morning?
Well, and does she temper her language ahead of the parliamentary vote later this month? I think that's the key thing for at least the bond market to watch out for. But what we're seeing this morning, at least across global fixed income, is that does not seem very phased by this big catalyst out of Japan. Treasury yields are only 3 basis points higher. You know, to me, this, at least the big negative or the big risk for the equity market longs was a blow up in bonds. We're not seeing that today, and I think that's just going to make the market more bullish at these tech stocks in the U.S.
Absolutely. That's the obvious read across at this point in time. Is it something that is sustainable? It's really hard to tell at this point. Up until now, it has been. The bond market seems to be behaving. The concern around the bond vigilantes showing up isn't there. Is the UK the kind of the model here? I keep coming back to it because we seem to have been the ones that have suffered the most and the most seen the quickest reactions, how quickly things can turn around. Liz Truss comes out with this great budget. Everybody's really happy. Kwasi Kwarteng's there. We're going to spend. We're going to deliver this kind of run it hot kind of style economy. Didn't last long. I think spotting the catalyst for change is really difficult in this kind of febrile environment that we currently find ourselves in. Let's turn our attention to what is happening in France. So Lecornu comes in, but doesn't change very much. So we have a new French Prime Minister, but we don't really have a new French cabinet. We've got a new Finance Minister, we've got a new Defence Minister. Bruno Le Maire is back. Like, he is definitely Macron's man. He was Finance Minister for a long time. The right is already signalling it will not support this government, so it comes down to whether or not the socialists will. And the risk already showing up in the French bond market futures is that we see another government collapse. Again, the link between Government instability, bond markets is there. Again, very hard to call in terms of how markets are going to react. At some point, do we reach a cathartic moment where the bond market goes, enough is enough?
Yeah.
At the moment, so far, the bond market has largely behaved in so many ways. It's been slow, it's been incremental. Yes, we've seen OATs pushing higher in terms of yields, but not by much.
Yeah, we have to start thinking, is this a government that is going to be able to pass a budget? We waited 3 weeks for this government to form. There's really not a lot of change happening. It just seems like a bit of musical chairs, but the theme is the same. You have Le Pen calling the reshuffle pathetic, in her words, to radio over the weekend. But again, is this a government that's going to pass a budget, or are we set for another year where France is unable to do so?
Yeah, it's funny. I was speaking to Rachel Reeves last week at Labour Party conference, and she was showing off that actually, at least in the UK, you can pass a budget even if UK yields are high, just to bring it back to Britain and the difficulties with budgets here. Look, it may be that these new names only have a few days in office, and it may be, as you say, that they can't get the budget through. The socialists suspect a trap here. They're going to want more detail. They're going to want concessions when it comes to taxes on the wealthy and on the pension reforms as well.
It doesn't feel like a trap. It feels like a sort of like a big hole that everybody knows is there. And the question is, do we ultimately end up falling into it? And I don't know how deep the hole is, and I don't know how big the market reaction could ultimately be. But again, it's another country waiting to see whether or not, how far can you push things before things start to crack? And the bond market continues to behave reasonably. Reasonably is maybe the wrong word, but at some point, do we get to the point where it doesn't? That you do start to get kind of blow-ups like we've seen in the UK. I don't know. The US is a whole different matter, but political instability, the theme there once again.
Exactly. We're headed into the second week now of this US government shutdown. Really not a lot of progress to hang your hat on from over the weekend. Republicans and Democrats still split, still blaming each other for the shutdown. Now, we need to get the shutdown over by probably Wednesday in order to get non-farm payrolls on the calendar this week. That's again looking unlikely. So in the absence of data, we're really looking at these momentum trades really continuing. I'm thinking of gold. I'm thinking of Bitcoin. Both surged to record highs. Bitcoin Sunday's trade breached 125K. Gold jumping another 1% so far this morning. These momentum trades, like the tech trade, really seem to be continuing in the absence of the U.S. economic data.
How will the data change things? I'm just kind of wondering how this is going to kind of work its way through the system. Does all the data arrive on the same day? Are we going to end up with a day when we get CPI, payrolls day? Can you imagine what Value's going to do with that?
No, look, I think the BLS is smart. They know that they want to space these out, but I think that they do want to get them out there before the Fed meets in October. So there will be a rush, maybe a bit of a compression on the data schedule if we do get the shutdown ending sometime soon. But, you know, we can talk about maybe how gold has been driven by this, but then the other argument of going into gold is really what we were talking about before, that all these governments around the world are struggling with their budgets, and people are looking for perhaps a safe haven trade if people are dropping their inflation targets. And I think that's what gold is telling us overnight and what Bitcoin told us on Sunday.
And maybe silver will as well, could hit a record itself today.
Apparently that's the tell. Somebody was telling me the other day, once silver starts to accelerate beyond gold and you get the real momentum into silver, you know that we're reaching potentially a kind of top in that trade. But it doesn't appear to be anywhere close to us right now. The gold momentum continues to be there. It is the hedge, it seems. Rather than treasuries, people are taking gold as the hedge and using that in their portfolios in the way that maybe they haven't done for a very long time. The acceleration this year has been extraordinary.
Yeah, and you can definitely argue that real money funds out there are underallocated gold, and this is just a catch-up trade, perhaps in the fourth quarter, really in some way that these investors have an eye onto what could possibly happen next year with lower interest rates, lower Fed interest rates. It's really hard to have a bubble bursting without the Fed hiking, and I think that's what gold is reacting to.
It's interesting. There's a story I saw around in the Journal this morning talking about the fact that everybody's telling Trump that the economy is going to reaccelerate next year. The economy is going to reaccelerate next year. Why do we need rate cuts next year? That's something maybe the market's got to deal with. Kamakshaya Trivedi is going to be joining us very shortly from Goldman Sachs. We'll talk about the yen. We'll talk about what's happening with the dollar trade. We'll talk about the EM trade as well. Famke Krumbula EY Geostrategic Business Group Director, joining us on France. John Bilton, JP Morgan Asset Management Global Multi-Asset Strategy Head, joining us a little later on. And Carol Nakle, Crystal Energy CEO, joining us in the wake of what we heard from OPEC over the weekend.
Well, let's get you set up for the risk events ahead this week. Today, we do hear from Lagarde. She is testifying to the European Parliament. But probably the key risk event this week is the Fed minutes on Wednesday. Yes, they're backward looking, but in the absence of any data this week, they might be the guide on where to next for the equity market and the Treasury market. On Thursday, the China market does reopen after the Golden Week holiday. Friday, we have University of Michigan consumer sentiment and the Nobel Peace Prize winner announced. As we had just mentioned, we probably need the shutdown ending by around Wednesday in order to get payrolls back on the calendar.
What should be on that list that isn't?
Payrolls, jobless claims, trade balance.
Yeah.
But I mean, really, it's payrolls we're all waiting for.
Okay. Well, in the absence of that, here's what else you need to know this morning. The Czech billionaire Andrej Babis has turned to forming a governing majority a day after winning a resounding election victory. The populist billionaire outperformed pre-election polls to secure 35% of the vote, the second best result of a winning party in the Czech Republic since the fall of communism. Babis said that talks were already underway with far-right and populist parties that have denounced EU policies on migration and climate. Elsewhere, President Trump is urging Israel and Hamas to reach a settlement to end the two-year war in Gaza. Mediated talks begin today in Egypt with US envoy Steve Witkoff and Jared Kushner attending. The first test of progress will be whether Hamas releases its remaining hostages in exchange for Israel freeing Palestinian prisoners. US officials say that a potential deal is the closest it's been in a very long time. And oil has jumped after OPEC Plus agreed to raise production by a modest amount, staving off traders' fears of a supersized increase. At a meeting on Sunday, OPEC and partners, including Russia, backed a 137,000 barrel a day increment. The group's latest decision came despite an earlier difference of position between co-leaders Saudi Arabia and Russia. So a bit of a surprise there when it comes to OPEC's decision, still increasing production, but not as much as by before.
No, there's an awful lot of oil out there, and they're beginning to realise, or they're beginning to recognise, that that is the risk, that you could see prices going significantly lower from here. We haven't seen it yet. There's a number of different factors behind that, one of which is the fact that the Chinese continue to buy epic quantities of oil and stick it into storage, which is something from a strategic point of view you definitely want to pay attention to.
Well, you have to think about, is this going to irk the U.S. president or not? Does he still want to see Saudi Arabia flooding the market with oil? You know, it's part of a big agenda of his is to get the oil price lower. It is pretty low if we compare it to where it's been this year. So probably not irking the president in too much of a manner.
I think MBS is set to meet President Trump later on this month. I think the Saudi Crown Prince is heading to Washington later this month, or maybe vice versa. But, you know, keeping that relationship going, crucial for both sides, obviously. But, you know, if you can't actually meet the quota, the supply hikes that you're saying you're doing, surely you need to pare them back, and that's what they've done this time. OK, it's going to be interesting to see whether or not the shale drillers in the United States are starting to get pretty ticked off at this point because of what is happening in terms of the policies that are being generated by the White House at the moment. They're also not happy with the bigger picture when it comes to what is happening with oil prices. You wonder whether that will start feeding back into Washington as well in the debate that is happening there. Oil prices have come down, gasoline prices have come down, electricity prices have come up. If oil prices start to stabilise, and you see that disinflationary factor coming out of the energy complex when it comes to gasoline, but energy prices continue to rise for electricity. That I know electricity is not a massive portion of the inflation basket, but you just want to pay attention. One is stabilising on a year-on-year basis. The other one is picking up quite sharply. That will feed through into a potentially positive energy inflation narrative for the United States going into 2026. Coming up, we're going to talk about what is happening in the auto sector. Stellantis reportedly planning $10 billion of US investments as this giant car conglomerate looks to reclaim past successes, particularly around the Jeep brand. Plus, Boeing said to prepare for the 737 output hike. We think it's going to come in October. Remember, it's FAA limited at the moment. We'll get the details of the implications of that. Plus, Japanese stocks climbing sharply as the yen declines. We're going to head to Tokyo next for reactions to the new Prime Minister that we are likely to see in Japan and the policies that are likely to follow. You want to get involved? Please get involved in our show today. Got lots of great guests coming up. Send us some questions for them. IB plus BBTV Go is the function. Look forward to hearing from you. This is Bloomberg. It is 7:17 a.m. We are inching towards the opening trade here in London, and you're looking at European futures pretty much treading water this morning, yet to wake up, even though we've just had JP Morgan raising Eurozone equities to overweight. Bit more enthusiasm stateside. US futures pointing higher there, catching the enthusiasm from Japan, the Nikkei at an all-time high. So let's dive into Japanese politics, shall we? Sanae Takaichi, the newly elected leader of Japan's ruling party, looks set to become the country's first female prime minister later on this month. Hope of more fiscal spending have stocks surging while the yen fell as traders have priced in the win. For more, let's bring in our Tokyo bureau chief, Isabel Reynolds. Isabel, good morning. Just talk us through what we know about Takaichi, what policies we can expect from her. It seems to have been quite a surprise for the market.
Yes, it does seem to have been, although she was one of the favourites going into the election all along, so I'm not quite sure why people were so surprised. But obviously, and this is a historic event, she's likely to become the country's first ever female prime minister. And one of her heroes, of course, has often been mentioned, is Margaret Thatcher of the UK. And like Margaret Thatcher, she is known basically as being very tough. She is not like one of these princelings that you often get in the upper echelons of Japanese politics who come from a long line of politicians. She comes from an ordinary middle-class family. She fought her way up to this position, and she's done that by being extremely tough. And this is a very obviously male-dominated and not to say sexist profession. She has other things in common with Margaret Thatcher. I would say she's known as a policy wonk. She's the kind of person who can give a long extempore speech on all sorts of different topics. She really knows what she thinks. But one aspect of her that's very different from Margaret Thatcher is she's also a big fan of motorbikes, fast cars and heavy rock. She's known as having been an amateur heavy metal drummer in the past. When it comes to economic policy, her hero is probably her former boss, the late former Japanese Prime Minister Shinzo Abe. So that means she's in favour of looser central bank policy, which is why we've seen some of the market moves today. But she differs from him slightly in that she's in favour of quite a lot of fiscal spending. She wants to support these households on lower incomes who are struggling with the inflation that's sort of plagued the economy for the last few years. And she also wants to do more, to spend more in general to stimulate the economy, and she also wants to spend more on defence, being this kind of nationalist person. So that's why we're seeing this rise in the stock markets today.
Yeah, a substantial rise. Isabel, thank you very much indeed. Isabel Reynolds, Bloomberg's Tokyo bureau chief on political change in Japan, political change everywhere, it seems at the moment. Kamakshai Trivedi, head of Global FX Rates and Emerging Markets Strategy at Goldman Sachs, joining us around the table this morning. Good morning.
Good morning.
Sell the yen?
I think the yen's had the move that it was going to have. I think markets were wrong-footed, expecting the Koizumi candidature to win. So I think, the move to 150, I think, is reasonable given what, you were going into it with.
Sustainable?
I think it's going to be a little bit more sustained. You have to put in some premium for those policies that, we heard about. I think there is a higher premium for a bit more fiscal spending. There is a premium for the fact that, the BOJ probably gets moved back to at least later in the year, probably January. That's our model case. So I think that, the move you've seen, I think, is going to stick around for a little bit. However, I think there are constraints to, having this kind of big policy shift that I think people are getting ahead of themselves. And I'll tell you why. First, I think the macro situation is not as supportive as it used to be for that kind of big monetary finance fiscal expansion that you saw during the Abenomics era. I think it's not as popular. Inflation has been quite unpopular in Japan. And that macro market conditions, I think, is going to limit the extent to which you can see a big shift towards expansionary fiscal policy that is accommodated by the Bank of Japan. So I think some premium is reasonable. I think we've had that move, especially given that markets were wrong-footed. I think it's going to stick around a little bit longer than it did in the past, but I think there are limits to how far it's going to go.
Well, I guess maybe to that point, put us maybe a bit of perspective on the move in the JGB market overnight. Was that as much as you expected in order to perhaps maybe tamper down some of these policies? Or what kind of move in the back end would get that kind of action out of the new government?
I don't think that it's yet been destabilizing. I mean, Japanese bond yields have already had probably one of the biggest wall-adjusted moves this year. And I think that the moves that we've seen, we expected something like 10, 15 basis points, for example, at long-end yields. You've seen sort of moves in that kind of neighborhood. I think that is relevant and appropriate given the sort of shifts that we've seen in markets coming into this event. But I don't think yet we are at a point where they're throwing a tantrum of any kind. So, I think that's something to bear in mind. But I think at the end of the day, I just don't think in the world we're in where, bond vigilantes are much more aware of risks around fiscal spending. It's true in the UK, it's true in the euro area, it's going to be true in Japan. I think this kind of expectations of a big fiscal shift that is accommodated, I think may well end up being disappointed.
Are there any assets that you've maybe changed your mind on? What kind of targets we can get into year end because of this catalyst?
I think we have to think about the yen again, right? I mean, I think if you think about the yen, there are domestic factors driving it, but there are global factors driving it. And the global factors are often more important than domestic factors. And the big global factor is what happens to the global cycle, what happens to the U.S. cycle. And I think part of the reason why the yen came into this event a little bit on the stronger side was because of the expectation that perhaps the U.S. labor market was still easing quite a bit. I think if you see a combination of the global cycle pick up, particularly into next year, and we actually do see a shift towards more expansionary fiscal policy in Japan, that's the kind of mix that would push the yen, weaker even from these levels. But I think it's premature to go there just yet.
We throw around the UK comparison, but I mean, it's not really tongue-in-cheek to ask you, is the Liz Truss comparison relevant here? I mean, you talk about the constraints on her. Given that she doesn't have parliamentary majorities, surely we can dilute the concerns.
I think that those concerns are not as acute for now. And I think there's a couple of reasons. You mentioned it, the fact, she leads a divided party. She's likely to lead a coalition government. And the fact that, in her own rhetoric, both, in her time in the last few years, but equally after she's been elected, I think there's been a much greater moderation in tone around that fiscal question. So I think I would definitely not go down that route, and I don't think that is a concern. But I think it's important to bear in mind the macro market environment within which she's going to operate. It's a much less forgiving environment than it was when you had the first flush of full-on Abenomics.
But also, if you have, and I do wonder whether you actually just see her as a revival of Abenomics or whether there's any more that she personally adds. But, if you're going to have more fiscal spending, surely that's not likely to equate to slower monetary tightening.
It shouldn't, and I think that's the key here. I think the Bank of Japan is on a hiking cycle. Our modal case is that actually there won't be that much fiscal expansion. That's what our economists expect, even after the shift in government. And our modal case has always been that the next move from the BOJ would come in January. So, in a way, I think none of that basic modal case has changed yet. I think the market needs to put in somewhat higher risk premium that those things could shift. That's why you're seeing the move that you're seeing today in the Japanese currency, in Japanese bond markets. But I think the constraints that are in place, both domestically, the political constraints we talked about, the fact that inflation is unpopular, but also the market constraints that we talked about in the global environment, all of that means that it's going to be, I think, somewhat sticky, but a limited move from here on.
Markets at the guardrails, as ever. Kamakshaya, always good to have you with us around the table. Kamakshaya Trivedi, Head of Global FX Rates and Emerging Market Strategy over at Goldman Sachs. So, I mean, if we check in, because we're in the last few minutes here of the Japanese market open, we're still seeing stocks off to the races on the Nikkei 225, up 4.8% at this point. But coming up on the programme, we're going to speak to Famke Krummüller, political analyst and strategist on European and global politics over at EY. That's next. This is Bloomberg.
Monday morning, good morning. At 7:30 in London, 30 minutes to go until the opening trade when it comes to equities. We'll talk about the bond markets in just a moment. European equities look soft this morning. In particular, CAC futures look soft. The reason for that, obviously, is the instability we are seeing in France once again. Are you going to see a hit to French banks? Is this maybe an opening of the door to higher taxes? There's all kinds of factors you need to fold into that market. But the clearest way of looking at it is what is happening in the OAT market. And Valerie's got all the details of that.
Let's check in on the European fixed income open. It is interesting, though, that, at least when it comes to the equity market, they're not catching the enthusiasm from the Japanese move overnight. But we take a look at the bond market, look at France. It is suffering from not only the rise in JGB yields overnight, some 12 basis points higher in the 30-year for those back-end JGBs, but it's also suffering from the fact we broadly have an unchanged cabinet that's been announced after 3 weeks. And maybe the market is really starting to doubt whether this is the government that could pass a budget. We're also seeing, when it comes between the Germany and France yield spread, that spread widening to 84 basis points. That's the widest since January earlier this year.
Well, let's dive into the politics now. The French president has appointed a broadly unchanged cabinet, as you say, Val, sparking an immediate backlash from the opposition parties. Now, the move undermines Prime Minister Sebastien Lecornu's chances of surviving a make-or-break week in Parliament. And to discuss, we're joined now by Famke Krummüller, political analyst and strategist on European and global politics in EY's geostrategy team. A very good morning to you, Famke. Thank you for making time for us. Can Lecornu survive the week, do you think?
That is the question of the morning. I completely agree. I think there are two things to watch right now. Meeting of the Républicains, so the center-right party, this morning, and then the general political declaration tomorrow in Parliament. And based on that, we will see whether the center-right stays as part of the government. First question this morning. And then the second question, whether especially the socialists will actually enable this government to continue, or whether they will vote against.
Well, yeah, what concessions would the socialists need to allow a budget passed through the Parliament?
They have made it quite clear they want, at the very least, two things. First of all, they want some type of wealth tax, ideally the Zuckman tax, about which we've now been talking for some time here in France. And they want to reopen the debate about the pension reform. I believe that, at the very least, some type of wealth tax will be something that the government, if it stays in place, will have to give to the socialists. I think that opening debate about the pension reform is rather unlikely at this stage.
Famke, good morning. It's Guy. How far away from elections are we?
So, to be honest, I think that at this stage, and given the reaction over the past 12, 24 hours to this new government, the chance of early legislative elections has risen steeply, because as we've just been discussing, it's now unclear whether this government can survive again. And it's unclear what the solution would be. That being said, clearly, early legislative elections would also not be a solution, because it would most likely yield a parliament that would be very similarly divided into three blocks, again with the far right as then winning or probably being the biggest bloc. So either no change, or maybe even the far right being led to form the next government after these legislative elections. So even these elections, they would create more uncertainty and more turmoil, and not necessarily be a solution.
So France is stuck. What is the solution to this? How do we work our way out of the current stalemate that we find ourselves in, and how long could it last for?
Yes, I think France has a structural challenge here, because the political system under current circumstances is not really working anymore. Even a presidential election, and the next one is scheduled for 2027, might not necessarily yield change, but then somebody else would be in power, so it would from that perspective be very different. But I do think that we can talk about some level of at least a challenged regime at this stage, because right now, unless the political culture changes towards more ability to compromise, which I think is very difficult in France, we will continue to be stuck in this current situation.
Famke, how does this set up France, at least on the European stage? What are the European implications of another considerably weak government in France?
Well, the challenge is, of course, that France is one of Europe's and the European Union's biggest foreign policy power, and therefore has a very important role to play under current international circumstances. And the president is weakened, and the entire, let's say, political elite in France is entirely inward focused on these repetitive political and government crises, and that makes France a much weaker actor in the international scene, which is a problem for Europe in this international environment.
Do you think there's a risk that yet if we get this election called, which you said in your words, the chances of that have risen steeply, that we see some nationalist far-right movement take over French politics?
I think that is definitely a possibility when you look at both the polls and listen to the general political atmosphere. The far-right party of Marine Le Pen is the one party that has not been in power and that is currently being looked at as the ones that are not responsible and not tainted by these last Macron years. And it feels like a lot of French are tempted to try what it means to have this party in power. And as I said, polls show that they would be the biggest party in the next legislative elections, and so at some stage they might actually come to power.
Famke, when you layer on top of that the victory of the Czech populist over the weekend, but also noting the fact that he's not aligned to Putin, how much does it all shift the balance of power across the European continent?
I think in general, and we've been seeing this for a couple of years now, populist parties in Europe have been gaining not just in prominence but also even in power. And this is something that is due to the fact that in a lot of countries the electorate is unsatisfied with what mainstream parties are offering them in terms of responses to their everyday challenges and problems. And so the problem that I see with all of this is that in the context of this international environment, where it would be very clear that one of the main things that the European Union needs is unity in order to be able to act decisively, what we see at the national level is all this movement in the exact opposite direction, namely more populism and more nationalism, and therefore more national solutions. And this is, of course, a huge challenge for the EU in this international environment again.
Famke, how sensitive to the bond market is French politics at the moment?
I think at this stage, not yet enough, maybe if I can formulate it in such a way. But it might very soon be if this turmoil accelerates, and clearly this is what's happening right now. I'm very curious to see what's going to happen this week. And ultimately, I do think that that might be the one event or the element that will at some stage have some power over what is going on in French politics.
Famke, great to catch up. Thank you very much indeed. Famke Krumbola from EY Parthenon. Coming up, we're going to be taking a look at what is happening with French stocks. Certainly that's going to be a factor at the get-go of trade this morning. Auto stocks are going to be in focus as well. Stellantis said to be planning to invest up to $10 billion in the United States. French banks, defence stocks, what is happening with the auto sector this morning. There's lots going on. We'll get to all of it in just a moment. Stocks to watch next. This is Bloomberg.
We're 18 minutes away from the opening trade, and it's red across the screen for European equities this morning, particularly in France, lower on the CAC 40 because perhaps of the French politics. Not a lot of compromise around this new cabinet, and it seems the market not impressed. We are not here in Europe catching on to the highs that we had seen in the Japanese session, Val, but it seems that America is.
Yeah, it does seem like the rest of the world, at least, is cheering some sort of jubilation from the fact that we could perhaps get a return of Abenomics, and with that, another bull market when it comes to those Japanese equities. The Nikkei closing up nearly 5% in Tokyo trade, dragging S&P futures with it up 0.3%. The one thing to keep in mind that could dent this equity market enthusiasm is a move substantially higher in the bond market. But flip the board, we really haven't seen it trickle through, at least in a destabilizing way, to the Treasury market. Those 30-year yields in the U.S. are less than 4 basis points higher, and that comes after a near 13 basis point climb in Japan 30-year yields. There is some very interesting things going on in alternative assets, though. I think many people are I guess, claiming that this is yet another economy looking to run their economy hot. Already in Japan, you have inflation above target, but yet you have a political government who is in favor of extra fiscal spending, of loose monetary policy. And on the back of that, you're seeing a flight into alternative assets, with gold trading at a record high and Bitcoin not far behind. Guy?
Thanks very much indeed, Val. Perfect setup to talk to our Markets Live executive editor, Mark Cudmore. Let's talk a little bit about what we're seeing in Japan, Mark. Your take on it, is it an overreaction? Equities up very, very sharply. Decent move in the yen, decent move in JGBs.
I think it's the correct reaction. I think it's an appropriate reaction. Not necessarily an overreaction, but this isn't the start of sustainable trends. So we've got a likely new prime minister who is much more in favor of kind of fiscal expansion, and certainly to get that kind of coalition, that's what she's going to probably have to offer out there. What I think is probably a little bit more debatable is the narrative that this pushes back the BOJ rate hike cycle significantly. I'm not sure that's the case. On the campaign trail, she made very clear, that she wasn't going to interfere in the BOJ's monetary policy. That's up to them to decide. And I think that she'll probably have to stick to that line to get that coalition of support from the opposition parties. So what that means is we probably do get more fiscal stimulus in Japan. That means it's positive for equities, as we've seen. And we probably get the BOJ not hiking in October. In my mind, that was already up for debate anyway, but they probably will hike in December. So it's just a little bit delayed. So that's meant some yen weakness, but I think ultimately the yen probably stabilizes pretty soon, because we're going to get fresh inflows into the equity market there. And I think we will see greater steepness in the curve. And at some point that might bring some inflows back into the JGB market. But that is where we probably got the global theme coming in here, that the long end yields in Japan have surged higher. Given what's also happening in the French news flow, this is kind of returning. And of course in treasuries, with the ISM prices paid, we've gone back to a global theme of long end bond yields rising. It was only a temporary relief in that story.
Well, with that backdrop in mind, Mark, are you still a fan of seeing more dollar weakness as we head into the fourth quarter, or is this something that could perhaps tempt your view that might be abating?
First of all, I very much believe in the longer-term dollar depreciation trend. I think it's an expensive currency that the world is overexposed to, and some of its long-term advantages are being eroded. However, short-term, I'm not particularly bearish the dollar. If I was forced to make a short-term trade, I'd actually be more biased for dollar strength for a bit of a bounce right now. I think that some of the factors around dollar weakness are very long-term, and people are over-positioned for them in the short term. And I think there could be a bit of a short squeeze, and maybe prompted by this dollar yen, it's kind of helping that narrative that we get a bit of a dollar bounce here. So short-term fourth quarter, I think dollar can probably do okay. I'm waiting for a new catalyst to get bearish the dollar again, but the long-term trend is very clear.
What about the read across globally from these Japanese moves, Mark? We were warned, I think it was by Goldman Sachs, that you could see 2 to 3 basis points higher in Germany, US, UK bonds from the JGB moves higher at the very long end. Are you surprised by what we've seen in terms of the read across so far this morning?
It's definitely been quite punchy, but I expect that this is going to be a global theme. I think that story is back in the kind of focus this week. So we've got not just the Japan story, which is a valid reason for long end yields to go higher. We've got a 30-year auction. I think it's tomorrow. Better check that, but I think so. We've got the French election situation. Gilts have got some structural problems. And as I said, prices paid in the US, there's an inflation concern there, even if we're not getting data. So this is definitely validly global.
Mark, France, thoughts on that? Are we at some point going to see a blow up? At the moment, we're seeing this kind of incremental move, a little bit, as we start to see, obviously, the OATs moving away from Italy, moving away from Germany. Is there kind of a big moment coming, or is that just the trend we're going to continue to see, just little moves rather than one big move?
We're going to get a big moment at some point. I find it very hard to predict when, and I'm not sure it's very soon. I want to be very explicit what I mean by that big moment. The Europe overall does not have a debt problem. What we're probably going to do is we're going to get a French blow up, if you want to call it, that forces the ECB to kind of step in or change the rules or some kind of support from the region, just like we saw in the Eurozone crisis 14 years ago. And that'll come after we see stress. But that's why ultimately I'm not very worried about France. It's going to be a problem for the next 6 months, a year until we get that moment. But then it'll be solved by the ECB. So yes, we're heading to that, but I think we're still months away from the real kind of mini blow up that we'll get in France to see those yields blow out.
Mark, we've got political stalemate in France. We also have political stalemate in the U.S. with the U.S. shutdown headed into its second week. How long does this shutdown have to go on before it materially changes any of your macro views?
It's a great question. I think, it's probably, the consensus going into it was that if we got more than 2 weeks, that's when we start worrying about if this is going to be a growth negative, cause some kind of problems. But that's really the starting point. I thought it was really interesting. There's a piece from Bloomberg Economics last week before it started saying it actually needs to go into mid-November before we see fourth quarter GDP affected significantly. So I thought it was quite interesting. Their point is that even if it lasts for 3 or 4 weeks, yes, we get a temporary hit to growth, but then that comes back as soon as we get the reopening, and therefore it's not a shift lower, it's just a temporary blip. So I really think you're talking about maybe the end of October. I'm going away for a week in late October. Maybe when I come back on October 26th, if the US government's still shut down, then I start worrying and become very worried and very bearish.
How dare the market do anything in your absence, Mark? Mark Goodmore, our Bloomberg Markets Live executive editor. We thank you for your views. And remember, you can find them and all the up-to-date analysis and insight from Mark and his team by going to MLIV Go on your terminal. Let's get to your stocks to watch now with Chloe Melly. Chloe.
Good morning, Lizzy. Let's keep an eye on Stellantis today after it is said to be planning to invest as much as $10 billion into the US. So this is part of the new CEO strategy of really refocusing on that key US market after the previous CEO had decided to move a lot of the production to countries like Mexico, for example, and also decided to invest heavily into Europe, which of course made Stellantis very vulnerable to tariffs. So we'll see how much this new US investment really changes this picture this morning. Of course, Stellantis has been on a bit of a downward spiral. It's also been underperforming its peers, Mercedes and Renault, as we can see here. So we'll see how much this US investment really changes the picture for Stellantis this morning. Moving over to Boeing suppliers. So Boeing is said to be planning to increase the manufacturing pace of its 737 MAX as soon as October. And that is really, it really signals growing optimism at the plane maker after some well-documented recent troubles. So that could potentially give a bit of a lift to those key suppliers. Safran is one of the key ones because it makes about 9% of its revenue from Boeing. So we could see a boost here, as well as Rolls-Royce, Leonardo and Dassault as well. A lot of those names have been benefiting from the Russian defense spending. And of course, this additional boost from Boeing could be another boost as well. And finally, another day, another BBVA and Sabadell story. BBVA CEO said that he expects the majority of institutional investors to accept the takeover bid. He said that they were willing, was convinced that we're going to be above the 50% threshold that is necessary for that bid to be successful. That, of course, is contradictory to what Sabadell CEO has said, saying that 50% threshold was unattainable. So we'll see how the market reacts to this kind of continued deadlock with this bid.
All right, thanks to our equities reporter, Chloe Melly. We're now just around 8 minutes away from the European equity open. Our eye is also going to be on French banks. I know Chloe ended there on the drama in the Spanish banks going on between BBVA and Sabadell. But with this move in OATs off the back of the announcement by the new government of a roughly unchanged cabinet, you have to start wondering if there are risks rising for French banks on the back of perhaps risk rising around a general election in France.
Absolutely. But when do we get to that point is the key question. Do we continue to kind of inch along in terms of this trade? At the moment, French banks will be firmly in focus. The connection with OATs, well known. The gold story into London this morning, I think, is going to be interesting for us. Neo names like that could continue to. They've been on 52-week boards day after day after day. Does that trade continue? But it's broader than that. The metals generally continue to perform really well. What's happening with copper? All of these trades look like they're on. It was interesting to see. Was it Bank of America back end of last week talking about a barbell of maybe US tech and the FTSE 100, because that's where you get the metals play, that's where you get the commodities play, that maybe gives you the advantage, which is going to feed back in to the AI trade.
No, I thought it was interesting that BBVA piece that did talk about that barbell was also talking about how we've never really had a bubble bursting without central banks hiking. And now that you've had maybe the Bank of Japan put on a back burner for yet another few months, is there really going to be a central bank that is going to tempt this AI bubble, if you do think that's what's going on here, if you think that's the dynamics at play from U.S. tech? We're not going to have a central bank bursting it anytime soon. And I feel like this return to Abenomics, the fact that we're not getting the bond market knocking off the equity market, it's just made me slightly more bullish this morning.
Do you know what I want to know? Who's the silver equivalent of Fresnillo so I can add them to my stocks to watch board for the Open?
We'll find out. We'll get back to you on that one. Maybe they do silver as well. You never know. Maybe they continue.
You have to start asking yourself, when are we going to get a pullback in gold? It's been on fire for over a month now. There has to be a coming pullback. I don't know what's going to trigger it. As we mentioned at the top of the show, it's really been about momentum. These momentum trades just been extending so far in the month of October. We're only 6 days into October.
If you get a pullback in gold, do you get a pullback in something else? Do you get a pullback in... I kind of...
That's how I feel right now.
How connected is this market in terms of the performance we're likely to see in the various asset classes? And what is the first asset class? Because maybe actually that goes against the idea that you need a central bank. Maybe another asset class crumbles. Maybe you don't need a central bank to hike rates, but you start to see that chain reaction through the momentum trade.
Well, we also talk about earnings season. I mean, we're only 6 days into October, but yes, like the third week of October, fourth week of October is when we get a lot of those big, heavy tech names reporting. Perhaps that's the catalyst that knocks us off our socks, but we got a while for it.
Especially if it coincides with the end of the shutdown.
Yeah. I wonder how the market would take the end of the shutdown. I'm assuming it would take it reasonably positively, depending on how long it lasts.
Depending what the payroll data comes out after it.
But Trump's being told, according to the Journal, that the economy is going to re-accelerate next year. It's going to be great next year. Why is the Fed going to be cutting next year is an obvious question around that. Anyway, the opening trades next. This is Bloomberg. Monday the 6th, good morning. I'm assuming everybody went home early on Friday. There was no payroll data, so you could maybe get an early luncheon, enjoy yourself. Not much was happening. You certainly didn't see the volatility you would normally have expected on the first Friday of a month because there was no payrolls. Actually, we did see something of a swoon towards the back end of the session in Europe, but we recovered most of that and actually came back up towards the end of the day, finishing at kind of the highs of the US session before it faded into Monday morning. So there's maybe a little bit of a downside move, maybe that needs pricing in to Europe this morning, which is why I think broadly futures are lower, despite what we're seeing out in Japan. But the CAC 40, Val, is the real story this morning. What are we seeing there?
Yeah, futures are lower, as you mentioned, catching up perhaps to the move in Wall Street late on Friday. But we are seeing some decent weakness when it comes to France, as CAC 40 futures underperforming this morning, down 0.4% after the new government has announced a cabinet, which is very, very similar to the previous one, perhaps upsetting those on the opposition on that side. Euro Stoxx 50 futures are in the red just by 0.2%, and FTSE 100 futures trading flat this morning. Perhaps gold helping out some of those miners listed here in the UK. Lizzie?
Yeah, so in terms of individual stocks to watch, we do keep an eye on Fresnillo, but some others on top of the French banks to be mining this morning include Stellantis, said to be planning a $10 billion investment in the US, a Bloomberg scoop here. Also mining Aston Martin, they've cut their outlook again on US tariffs. They see lower sales. A redhead earlier in the hour, they no longer expect to meet their full-year volume guidance. And then we have BBVA, the CEO, saying that he expects the vast majority of their institutional investors who hold shares in Sabadell to accept his bank's offer for the smaller rival. So all of those in focus at the open, Guy.
Absolutely. We turn our attention, though, first and foremost to what is happening in France today. Here we go. It is time for the opening trade this Monday morning. French politics back in the spotlight as we watch what happens with the French government or where it goes next. The FTSE 100, as ever, out of the gate first, but it is doing very little this morning. We'll break down the sector components in just a moment and see what is happening with those mining names, plus also some of the oil names could be in focus as well. The IBEX, the Spanish bank story, is present there. We're watching what's happening with BBVA and Sabadell as the clock continues to click down to the final moments of whether or not we are going to see investors backing or not backing that deal. The CAC is the story, though. That was the moment I was waiting for. There you go. The French market is down by 0.6%. If you're looking for a theme this morning that's running through all of these markets, it is politics. You can see it in Japan. You can see it in Europe, in France. You can also see it in the Czech Republic as well. But you can also see it over in the United States. Politics is one of the key drivers right now in the way that it hasn't been for a while, but it certainly is now. And the CAC 40 is now down by 0.7%, Lizzy and Val, as it continues to drop. What are we seeing in terms of the component breakdown of that move?
Look, well, let's take an eye on the sectors. We do have only 5 in the green, the remaining 15 in the red. And at the bottom of the basket there is banks, down some 0.5% as a sector. If I open up there, that sector, we do see French banks trading lower. Soc Gen down 3%, Credit Ag down 2%, BNP Paribas down 2%. So this is a macro story, at least for the OAT market, now hitting some single stocks so far in the first moments of trade. At the top of the basket, we do have energy. Now, that is down to OPEC Plus, their decision over the weekend to increase production, but not as much as some had penciled in. That boost in oil prices is seeing some of these energy stocks trade higher this morning. Yeah, so Brent up 1.5%. The oats spread at 84 basis points at this point. Just some of the other stocks that we had flagged, of course, coming back to the macro moves, we have gold flirting with $4,000 and Fresnillo benefiting again this morning, up 2.4%. Similar moves, actually, for Stellantis. We'd flagged that they're planning $10 billion of investment in the US, so those shares benefiting as well. BBVA, another one that we'd mentioned, those shares down 0.9% at the moment. And also, I had just added to my stocks to watch Essilor-Luxottica, because you'd flagged, Guy, that Nikon shares had jumped about 6% after Essilor-Luxottica had raised its stake. So on the flip side, those shares down a little touch.
Tech is up.
Yeah.
Did quite well. ASML, yeah, biggest
Second day in a row.
Biggest points gainer, up by another near 2% this morning. More positive news continuing as we watch the foundry into Nvidia, into end market kind of use case continuing. But ASML obviously at the bottom of that food, well, top of that food chain, depending on your point of view. It starts off the whole process. Lithography equipment is the kits that you use to make the chips and kind of make the machines to make the chips, and kind of it sits at that kind of critical point. It is up very nicely. The real kind of mix in terms of the pharmaceutical stocks, though, this morning. Astra up by 0.8%. But you're seeing GSK down by nearly 2% this morning. So a much more mixed and less concentrated pharmaceutical trade. Roche is also tracking a little bit higher. Novo Nordisk is also tracking a little bit higher. So that's interesting that we are seeing a little bit of a breakdown. We'll break into that and figure out what is happening and why GSK is moving to the downside in just a moment.
Well, let's focus in on French banks and perhaps what the French market is telling us so far this morning, and bring in our guest here around the table, John Bilton, the head of global multi-asset strategy at JP Morgan Asset Management. John, we're seeing French banks in the red, OAT yields up some 6 basis points in the 30-year sector. When do French politics start to erode your bull case for European equities?
Well, I think if anything, they probably give us an entry point. I mean, look, this is Europe. We have 20 countries in a single currency with an average election cycle of every 4 to 5 years. We have an election every quarter. You know, this is not something that is new news. The French deficit has been an issue for some time, and the fractious nature of the French Parliament is something which I think markets are absorbing. I think the move we're seeing in the French banks, remember, bear in mind, the interesting thing about Eurozone banks as a whole is over the last 5 years, in dollar terms, they've actually outperformed the Mag 7. So any excuse to take a bit of profit may happen, but also bear in mind that in this single market, we actually have very few areas where we can express a political view through markets. And banks, together with the OATs, are really the best way for investors to be thinking about how they might hedge an otherwise constructive Eurozone view. So I don't see this as being something which is necessarily new news. I think it's a reasonably lucid reaction, and it gives me a bit of comfort that investors are treating this as being a local French issue as opposed to something which is affecting overall Eurozone confidence.
Well, it's interesting to see this local French issue happen at the same time that we had a surprise election result out of Japan that has also tempted their own back-end yields higher. So now we have two governments at the moment having issues in the back end, small issues, nothing is destabilized. But does that perhaps worry you that we're having these fiscal dominance moments happen at the same time to some of these governments?
Well, look, I think it's part of a bigger trend. If we look over the long run, We spent a decade and more with this big monetary experiment where we tried to bring down debt to GDP by shrinking the amount of debt. And eventually, governments, voters, policymakers got sick and tired of the drag on growth. So this is another attempt to address this by building out fiscal side to potentially invest in productive assets. Whether that will work or not, open question. But it is a marked change in policy and something which is affecting the US, the UK, Japan, Germany, everywhere. So, yes, this fiscal dominance we do think is becoming a feature, and it does warrant steeper curves. But bear in mind, at the same time, we have a reasonable amount of savings, particularly across the Eurozone. 15.3% is the highest level of savings we've had, excluding the pandemic years. Japan is a famously high savings rates economy. So as a result, you steepen those curves it will bring demand in at the back end. So to my mind, this is a lucid and rational repricing of that fiscal position, as opposed to necessarily something which is bond markets in panic.
John, can we turn to the US? In your notes, you see the US re-accelerating. Does the private survey data from last week change your mind at all?
Not really. I mean, I think the issue at the moment, obviously notwithstanding the shutdown and the lack of data, we know that there's some volatility coming through in labour markets. So we know that we've got to account for some of the workers who took the buyout offer at the beginning of the year. We know that some of the temporary permits that have been issued are expiring and not being replaced. That may affect payrolls, won't affect jobless claims. So we think that we're coming up on a period of relative noise in the data as a matter of course. But if we look at job openings, quit rates from some of the private sector data, actually it's showing a labour market which is sluggish but not rolling over. So we feel fairly confident there.
So the Fed doesn't need to cut then?
Well, does the Fed need to cut or not? The answer to our mind is the Fed probably is sitting a little bit above what its long-term fair rate is. So if we've got a situation where you are worried about the inflation rate, the jobless rate, and when you look at the inflation rate, the view is, OK, if we get tariffs coming through, it's a one-off price level reset, as opposed to the acceleration, then judgment call probably is to bring it back more to neutral. So does the Fed need to cut aggressively? No. Is the Fed in a position where it can get away with bringing forward some cuts, which is what we think has happened? Yes, we think on balance they probably can be justified. There were so many articles this weekend about whether or not there is an AI bubble. So many. They were everywhere. How many client conversations are you having about that subject at the moment? What is your answer to those that ask that question? Well, now we've got no payroll data, probably more questions about that. But, devil makes work for idle hands and all that. But the point being that I think when you see assets trade strongly upwards, it makes sense to ask what's going to drive them further. Yep. And if the answer comes away as, not very much, it's greater fool theory now, then sure, start thinking about bubbles. If the answer turns out to be strong cash flow generation, strong earnings growth, strong demand growth coming from end consumers, then actually you'd have to argue... Can you answer any of those questions yet? Well, I think that what we can see is the cash flow growth. I mean, if we look at earnings growth on some of the big tech names, we're seeing these compounding up at 50% year on year. What we're seeing is around about a 25% cash flow generation rate that's growing at 5% a year across the large tech firms. So we're seeing firms which also, if you leave them going sideways for very long, because of that cash flow and earnings generation, they cease being growth stocks. They become value stocks very, very quickly. So right here and now, I think we're not in what one would argue is an AI bubble. We are in a chasing earnings growth. And at some point, if that were to disappoint, then I do think that you have some potential for profit taking. That these are well-run, strong businesses that are actually doing what they're supposed to do, generate profits and generate cash. It's very different from the 2000s when we were seeing a lot of money chase profitless companies. So I would argue, by all means, absolutely should be checking regularly bubble statistics, but it's a check and verify mode at the moment. And at the moment, I'm confident that we're seeing the earnings coming through. Same argument with gold? Gold's an interesting one. There's a quite sharp intake of breath there. I heard you saying on your previous segment that, when are we going to see a turnaround? I think at the moment, it does feel like a momentum trade. I guess the thing that concerns me about gold is not that it makes sense in a portfolio context, it's uncorrelated, it gives an inflation hedge, etc. It's the characterisation of it as a purely safe asset. Here's an interesting thing. US Treasuries, past 10 years, Average volatility 30-day, about 5.25%. Volatility S&P 500, 16%. Gold, 13.5%. It's much more like a stock market type of volatility than a bond market type of volatility. So it does a job in a portfolio, hedging against deficits, as we talked a moment ago, hedging against inflation fears and currency debasement. But at the end of the day, it's not a replacement for your stock of treasuries.
John, in your mind, what's the biggest risk event in Q4?
Well, I think the biggest risk event in Q4 is probably, to my mind, would be an overstatement of some of the geopolitical risks that are doing the rounds. I think as investors, we spend a lot of time wondering what could unseat markets. But if you actually look over the long run, actually markets pay little attention to geopolitics. If you go back and you take a simple 60-40 balanced portfolio and you look at it against cash and you invest it 1 month before a major risk event, actually after 3 years, it's outperformed cash in every case by an average of about 20%. So the biggest risk to me is investors getting overly worried and then end up having to chase a market which recovers quickly. There's a lot of cash on the sidelines. I think we can see that from the price action in Tokyo. I think we can see it from the $7-odd trillion that is sat in money market funds right now. To my mind, investors getting spun around and getting out of markets too soon on geopolitical tension is, to my mind, a bigger risk that investors have got to weigh up when they're asking questions about bubbles, deficits, currency debasement, Fed, etc.
Stay invested.
Robo, risk of being out.
Just the amount of money that flows into passives is kind of fascinating as well on that front, and just kind of this mechanical process of money moving in. Great to see you.
Good to see you too. Thank you.
John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. Let's take a look at the Core 6 this morning, figure out what is happening there. We are obviously watching very carefully what is happening with French assets. Tech, though, is on the front foot. It's interesting, defence stocks are holding their ground this morning. Very mixed picture in the pharma space. Elsewhere, as I say, we are watching what is happening with the French stock story. We're also watching very carefully what is happening with some of these auto names too. Chloe Melly, what's going on?
Good morning, Guy. Let's start with Stellantis. So Stellantis is actually up this morning, so this should be a thing that says that it is up this morning on the back of that report about the $10 billion in investment in the US. So this is a shift in strategy away from investing a lot in Europe and moving production to Mexico, and instead moving towards refocusing on that US market. So the shares are up this morning on the back of that shift in strategy. Moving over to French stocks. The French stocks are a little bit weaker this morning as the Vinci, Eiffage, Société Générale, BNP Paribas all in the red this morning as the French government is on the brink of collapse. So Macron's decision to appoint a broadly unchanged cabinet really sparked backlash among opposition parties, and now it makes it really a make or break week for Sebastien Lecornu, the Prime Minister. And so we see that weakness across those construction names, so Vinci and Eiffage, but then also the banks, so Société Générale, BNP are also weak on the back of that this morning. Moving over to Fresnillo, the gold miner is up after gold hit yet another record. That is because the US government shutdown is dragging on and is really spurring on that flight to safe haven assets, and it's making it's really good news for Fresnillo, which is up 2% this morning and is up 3 digits so far this year. And finally, let's move on to SEB Group, which is a French company that makes household appliances, and it is down, taking a real beating this morning after cutting its sales outlook because of weakness in Europe, and we can see the shares now down 23% this morning for SEB.
All right, what a move. Chloe Melly from our equities team, we thank you for those stocks on the move at the open. And we're going to dive into one of them in just a moment. Stellantis reportedly planning $10 billion of US investments as the car maker looks to boost its brands. We'll have more on that story for you next. This is Bloomberg. Welcome back to the opening trade. We're 18 minutes into today's session, and we're treading water really across the European continent, except in France. Shares down 0.7% off the back of the politics. This new cabinet, pretty much very similar to what we've seen before. So not a lot of traders impressed by this, and we are seeing the reaction in the bond space as well. But in terms of our stocks to watch this morning, we already flagged Stellantis. Those shares currently up 1.8%. This after our Bloomberg scoop that Stellantis is reportedly planning $10 billion of US investments as the car maker looks to reclaim the past success of the Jeep brand. We can get more now on this story with our Global Automotives editor, Craig Trudell, who joins us around the table. Craig, how fast is this money going to come through, and how much of it is actually new money?
So earlier this year, there was an announcement. Conveniently, it was right after Trump retook office. It was about $5 billion worth of investment. Some of that was committed to as part of the latest agreement with the United Auto Workers Union, reopening a plant in Belvidere, Illinois, that had been closed under Carlos Tavares. Building a mid-sized pickup there. I think there's a lot of investment that is needed for this company after the amount of sort of starving that was done under Tavares. And also, this is a company that, despite the fact that they are just coming off of a little bit of a pickup in sales, has seen this really sustained decline in sales over the last few years in the U.S. And before this return to the White House on Trump's part, you had actually a senator a new senator talking about maybe this European company led by Europeans should offload their U.S. brands. So there's kind of this bit of animosity in Washington that has been soothed by the fact that we've seen John Elkann try to patch things up the last few months.
Well, Craig, balance this out for us. How much is this investment really needed, or is this really seen by a move by Stellantis to placate the White House?
I think this will take part over several years. I think a real question will be just how much in the process of trying to satisfy this White House do they end up kind of starving Europe the way they starved North America for a time. And there's real concerns, I think, in France and in Italy in particular. Some of those brands, Alfa Romeo, Fiat, really are underperforming and probably need some of the TLC that now Jeep and Ram are getting. So will there be maybe some satisfaction in the White House? I suspect so. I think another thing that's coming into play here is recently the Trump administration announced new tariffs on medium and heavy trucks. And Stellantis builds Ram pickups down in Mexico. If they don't make an investment to address that fact, that will be something that we reported just last week. There's this sort of intra-Detroit debate over that fact that GM and Ford make their big pickups in the U.S. and Stellantis does not.
Talking to the White House, Aston Martin makes its cars and SUVs in Wales and in Warwickshire. Quite a long way away from the United States. Indeed. And that's a bit of a problem.
It really is. And so we're seeing them, do a profit warning second time this year.
Yep.
There's a funky sort of quota system that was in the fine print of this agreement between the U.S. and the U.K., where somehow, some way, as an industry, we're going to have to agree to who can ship what.
Yep.
I think our very own Chris Bryant and Bloomberg Opinion did a great column about this a few months ago. How the heck do you make that work practically? There should be plenty of room for a company of Aston Martin's size being able to, sort of get its portion of that, especially now that we've just in the last few weeks had Jaguar Land Rover with its cyber attack. Maybe that makes things less urgent, particularly over the next year. But this is absolutely going to be a mess if it's not addressed a little bit more clearly. And I think we should also call out the fact that this is a company in Aston Martin that just has not executed well for years and years now.
All right, Craig Trudell, Bloomberg's global automotive editor. Thanks for joining us on the latest on the auto space. Well, over to the banking sector. Just 4 days to go into the deal deadline, and BBVA's chief executive says he expects the vast majority of institutional investors will hold shares in Banco Sabadell to accept his bank's offer for its smaller rival. Bloomberg's Spain bureau chief, Rodrigo Orella, has the details. Rodrigo?
Yes, the bank, the bidder, BBVA, is convinced that this is their big winning card. They think that there's as many as 30% of Sabadell's shareholders who are institutionals, and that these, because they are quite complex and educated in financial issues, they will all see the advantage of this and will all go to the deal, because staying in Sabadell doesn't make much sense in BBVA's argument. So that would give them 30% of Sabadell, in their view, ahead of the deadline on the 4th. The big question then is what happens with the passive investors, which they say is maybe hold about 20 to 25%. BBVA believes half of those will, just because of how passive investment works, go to the tender as well. And that leaves the big issue in Sabadell, which is 41% of the shareholders who are retail investors. And most of those are also Sabadell clients. So the big fight right now is going on around there. Either way, if BBVA's numbers are correct and all these investors, institutional and passive investors, go, they would already be pretty close to the 50%. Now, what we're all wondering is there maths, are they doing the maths right or not?
Absolutely. And the clock is ticking. Rodrigo, thank you very much indeed. Spain Bureau Chief, our Spanish Bureau Chief, Rodrigo Orihuela. Bloomberg is learning that Boeing is guiding its suppliers towards the fact that the 737 MAX output could be about to be hiked. Remember, it's FAA restricted at the moment in terms of the capacity that it can deliver. It's a sign of growing optimism that the plane maker is going to get a little bit more wiggle room from US regulators. Joining us now, our aerospace reporter, Kate Duffy. Kate, what does this mean for Boeing? What does it mean particularly for its customers that are waiting these aircraft?
Well, this is a crucial step for Boeing because it means it can increase the production of its cash cow jet. That's the 737 MAX. So the more MAXes it delivers, ultimately the more cash that brings to its balance sheet. So the latest that we're hearing is that the 737 MAX output could be increased to 42 jets this month. And we could have 2 more hikes next year, meaning that the output could be up to 53 a month. And so this is something that Boeing has really pushed for a while for the FAA, and this follows obviously the door plug blowout on the Alaska Airlines jet last year. And this is really music to customers' ears, especially the likes of Ryanair. You know, they've been blasting Boeing for the past year about how they're not able to ramp up their growth and their network because of the lack of aircraft coming through, and especially for the 737. So this seems like it's likely to happen. Chief Executive Officer Michael O'Leary was really optimistic about Boeing last month when he spoke to us on the ground in London. So this really takes Boeing, matches Boeing with Airbus almost. And yeah, I mean, we'll wait to see what happens.
All right, thank you for the update, Kate Duffy, our aerospace reporter. Really helpful to get that. But coming up on the programme, we're going to take a look at oil. OPEC Plus cautiously increasing its oil supply despite the signs of an emerging surplus. You can see that Brent at $65 a barrel on this more modest increase than perhaps expected. And we're going to dig into this next with Carol Narkley, CEO of Crystal Energy. That conversation coming up next. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session, and you wouldn't know it by looking at this screen that we've had the Nikkei hitting an all-time high on the victory of the Japanese Iron Lady, that pushing US futures higher. It's not very enthusiastic when it comes to this because we here in Europe are focused on French politics. The CAC 40, really the underperformer this morning, down 0.6%. Not much of a change when it comes to that new cabinet named, and disappointment when it comes to the oats bund spread, disappointment when it comes to French banks weighing down the CAC 40 guy. What are you looking at under the hood?
The European market doesn't know which way to go this morning. Does it go down or does it go up? It's kind of just sitting there doing nothing. We're not Japan, we're not the United States, we're doing nothing today in Europe. 300 stocks are up, 273 are down. That tells you everything you need to know. Nice balanced market, no volatility, everything balances itself out. Volumes up a little bit versus the 20-day average. We're up by 18% this morning. but it's a very balanced market. There are actually some quite interesting 52-week highs and lows, so I'm going to give you the excitement of those now. ThyssenKrupp is up by nearly 2%. Look at ASML. The tech trade is on once again. ASML is the key beneficiary of that. AstraZeneca also rising quite nicely, up by 0.9%. There's a number of big stocks making 52-week highs today in Europe. That is worth paying attention to. There's a few lows, but they're less well-known names. SEB. So Val and I both made the same mistake. We saw the headline this morning and we thought, my lord, this is a Scandinavian bank that is having a major crisis this morning. It's not. It's the maker of kettles and dishwashers and all that kind of stuff in France. SK is actually the code you need to go to if you are looking for this stock. It's had an update this morning, third quarter update. The market does not like what it hears. It's hearing basically that they're telling a story of low demand in Europe. And look at what is happening with the stock. It's being absolutely battered. On a one-year basis, we're now down by nearly 50%, and we take a sharp leg lower, Val, this morning. It wasn't SEB, it was SK.
Kettles, not banks. So here's what else you need to know this morning. The Nikkei soars more than 4.5% after a surprise ruling party vote puts pro-stimulus Takaichi on course to become Japan's first female prime minister. The victory has reduced expectations that the Bank of Japan may hike interest rates while raising worries about more debt supply to finance the stimulus. And over to France, where the French President Emmanuel Macron's decision to bring back a largely unchanged cabinet is sparking an immediate backlash from his opposition parties. The decision threatens Prime Minister Sebastien Lecornu's chances of surviving a crucial week in Parliament. Macron reconfirmed most senior members of the cabinet to their original post, but named a close ally, Roland Lescure, as finance minister. Oil has jumped after OPEC Plus agreed to raise production by a modest amount, staving off traders' fears of a supersized increase. At a meeting on Sunday, OPEC and partners, including Russia, backed a 137,000 barrel a day increment. The group's latest decision came despite an earlier difference of position between co-leaders Saudi Arabia and Russia. Guy?
Let's talk a little bit about what is happening with that oil story. Carol Nakle, CEO of Crystal Energy, joins us now to give us a take on what we learned from OPEC. Carol, in some ways, this was a much more muted response from OPEC. Are we reaching the limits now of what it can do? Are we getting to a period of stability?
Yeah, it depends really on how you read it, because yes, you can say it's a modest increase because some people were expecting a much higher unwinding of barrels of the voluntary cuts of the 1.65 million barrels a day voluntary cut, which were the second tranche of voluntary cut introduced by 8 members, especially after we saw how over the summer they unwinded their first tranche of 2.2 million barrels a day quite rapidly. So therefore, today to see 137 barrels a day, maybe some people must have seen this as modest or not on par with what happened over the summer. But it is nevertheless a continuity in terms of the direction of the travel, because last month for October, they already announced a similar amount. So they are continuing with this cautious approach. And also, it's still an increase. It's still putting more barrels in the market, bearing in mind that the seasonality of the demand, both in the Western Hemisphere with the holiday season over, the driving season over, but also domestically in the region, especially in the Middle East, where we use lots of oil to cool our houses in the summer, that the seasonality of the demand is also tapering off. So that has encouraged a more cautious approach. Now, some people would say, oh, OPEC is still testing the market because prices have not crashed. That is true, but we have to keep in mind that what OPEC is announcing on paper is not actually what is being released in the market, sure, with some claiming that only around 60% of the 2.2 million barrels a day made it to the market, because some producers have to compensate and others, like Russia, don't have the capacity to put more barrels in the market.
Carol, I understand that from a supply side point of view, that actually in reality we don't see these barrels arriving. I'm also aware of what is happening on the demand side as well. The Chinese in particular are buying a lot of crude and putting it into storage. Is that one of the key reasons why we haven't seen oil prices coming sharply lower? And then that begs the question, will the Chinese continue to buy?
Absolutely. I mean, if I look at the demand side, I think China is the main component in terms of keeping a floor to oil prices. So what we have seen so far, I think if you take China out of the equation, prices would have been much lower. But the Chinese are buying not because their economy is booming, it's primarily for stockpiling, including strategic petroleum reserves, and especially when they have access to discounted, attractive, cheaper oil to buy from Russia and other places as well. So of course they are buying. And the big question as we go into 2026, and this is where you can see the kind of consensus among analysts observing the market, observing the Chinese economy, observing domestic consumption and their imports need. The big question is for how long and for how much more will the Chinese continue to buy and salvage oil demand, especially in the absence of a global growth in the economy that would fuel a global growth in oil demand. So all eyes are on China in terms of the strategy, and nobody really knows. All the numbers that we have are primarily guesswork because the figures when it comes to inventories in China are not publicly available. There are lots of opacity around the Chinese figures. So we're all a bit engaging in some guesswork about what's happening in that part of the world.
Carol, good morning. It's Lizzy. The desire to hike supply clearly is driven by Saudi Arabia, not by Russia. I wonder how fragile you think the alliance is here behind the scenes.
I mean, look, there's no doubt that what we are seeing, these short meetings, few minutes long and online and reaching such an important decision, they are showing a united front. But we are not naive. We know very well that OPEC and OPEC Plus in particular is not a coherent entity. And if you look at individual countries, they do have different interests and different needs. But let me here pick on the two main players, Saudi Arabia and Russia, especially given their different needs when it comes to oil prices. Now, of course, they are both oil-dependent economy, but the Saudis are comfortable with the prices where they are and even a bit lower, not only from a domestic perspective or economic perspective. Of course, they will do much better with higher prices, but they can borrow. They have the safety cushion. They are sitting on a lot of spare capacity that they would like to put in the market and then regain market share. But also there is a strategic dimension which is not often discussed, but I'm not naive to ignore it, which is having an important ally such as the US on board, with President Trump being very clear that he doesn't want to see prices going higher. Russia, on the contrary, it's a war economy. It's hugely dependent on oil and gas revenues. They are under sanctions, and sanctions might be tightened further with the G7 warning of further sanctions coming their way to reduce Russia's oil revenues. So Russia needs these higher prices. It doesn't want to see the market flooded. But at the end, we don't see that. We're all speculating. We don't know what's happening behind closed doors. But at the end, OPEC Plus, we have to recognize that despite the fragility of what's happening behind closed doors, they continue to maintain a united front.
But how are you factoring the geopolitics, Carol? Because we've seen this step up in drone incursions across Europe. We're potentially on the brink of a Gaza peace plan. How does that change your outlook for pricing?
I mean, geopolitics will always be there, right? And even if there is a kind of peace deal in Gaza, I wouldn't say that that's it. It's fait accompli across the Middle East. I come from the Middle East, and I don't recall having a really long period of stability. So that's the harsh reality of the Middle East. Also in Europe, what's happening between Ukraine and Russia, with the Ukrainians stepping up their attacks on the energy infrastructure and vice versa, Russia stepping up its attacks on Ukraine. So the geopolitical risk is there, but somehow it has been factored in oil markets and oil prices analysis. However, what we need to start talking about is put into perspective the barrels that OPEC Plus is releasing versus the spare capacity, because a geopolitical risk premium tends to be dampened when you have sufficient spare capacity in the system. And as OPEC Plus releases more barrels, then that spare capacity is reducing gradually. So at some point, we're going to feel more the impact of geopolitical tensions than what we are feeling today because of this increase in the barrels that OPEC Plus is putting in the market. But at this moment, there haven't been any supply disruptions despite the geopolitical tensions, but it's still a wild card and a risk that we have to factor in our analysis going forward.
Carol, what about also the risks of the Saudi Arabia's relationship with the White House? The Saudi Crown Prince MBS is going to be in Washington in sometime in November. Is there perhaps a catalyst for their relationship changing?
I mean, the relationship between the White House under the Trump administration and the Saudi Arabia under the leadership of the Crown Prince Mohammed bin Salman, I mean, that couldn't have been better, especially compared to what we saw under the Biden administration. We're talking here, interestingly, about the two largest producers of oil in the world. So they do have common interest, which is to see, yes?
I'm just going to have to jump in. We've got some breaking news out of France, which we need to get to straight away. Thank you so much indeed for joining us. Carol Naclay, the CEO of Crystal Energy, on what is happening in the oil markets. Let's talk about France.
Yes, the French Prime Minister Sebastien Lecornu has resigned. This news just breaking across the terminal now. The euro dropping 0.5% to 1.16 per dollar. The oats bun spread widening to 87 basis points off the back of this. They had just named the new cabinet, pretty much similar to what we have seen before. We had seen the disappointment in these markets off the back of that, the difficulties faced to reach a budget consensus, yet again seeming to rear their heads with Lecornu. And here we have the downfall of another French Prime Minister this morning.
That's fast. Even by French standards, this is now getting the rate of change, the half-life of this process. The acceleration is extraordinary now. So the CAC 40 is now down by 1.75% and dropping rapidly. You are obviously seeing French banks getting hit and hit hard this morning. We are watching to see what will happen next. It is unclear at this point what the catalyst was. Is it a conversation within the government, or is it basically a realisation that actually this new cabinet is not a sustainable force, and therefore actually we are likely to see this government falling at some point? Maybe he has decided, the early indications are from the socialists and the far right, that this is not something that is going to be sustainable, and as a result of which he's gone early.
You're looking at BNP Paribas shares down 3.5%, Crédit Agricole down 3.4%, SocGen down 4.8% off the back of this. You had noted the French oats moves as well. The 10-year French oat yield higher, 8 basis points at 3.5%, Val.
Well, look, I mean, perhaps he has just come to terms that this is not the kind of cabinet that is going to pass a budget, so he does not want to sit and be leader of it. But that, again, is spooking markets' thoughts that a general election could be way quicker than we think.
So you get a parliamentary election, which appears to be obviously the first thing that potentially could be coming down the pike towards us. Is Macron's position untenable in all of this as well? He is trying.
Could he resign?
I don't know, but he doesn't have to. Obviously, we've got the presidential election is a long way away. He is term limited, and therefore it would effectively be an end of his political career. Let's try and answer some of these questions. Our correspondent in Paris, Caroline Carnan, joins now. Caroline, do we have any idea why this has happened?
Well, it's probably because of the situation with the Republicans. I mean, obviously, the Republican Party reacted pretty badly last night after the nomination of this cabinet. Even though Bruno Retailleau kept his job as Interior Minister, they were disappointed, for example, with the comeback of Bruno Le Maire. And they were supposed to have a crisis meeting in just a couple hours from now to decide whether or not they were going to stay in this government. In fact, we had lots of emails this morning from the French government saying there would be a handover at this time for Lecornu, for Roland Lescure. There would be another handover for Bruno Le Maire. And now everything is collapsing already. 3.5 weeks with this Prime Minister Sebastien Lecornu. And as many analysts have been saying all morning, we are now getting very, very close to perhaps new fresh legislative elections.
In terms of where Macron therefore stands, what does he do now? We've been through a series of governments. None of them are able to deliver what he needs them to be able to deliver. Is there another person that he can tap near term to run a government? What happens next in this process now that Lecornu has gone?
It's a very tough question right now. Obviously, he still hasn't tried the center-left option, which is what Olivier Faure, the first secretary of the Socialist Party, has been calling. And Olivier Faure was just on the radio on France Inter just an hour ago saying that he was not necessarily going to make Lecornu collapse this week unless there was a comeback of the debate on the retirement reform in Parliament. So that's kind of one last option, but clearly we could also head towards fresh presidential elections. That's another option. Of course, something that the National Rally and the far left have been calling. It's very unclear at this stage what options are remaining for President Macron. His popularity is at a record low. 16% of positive opinion, I think, was the latest poll last week. So clearly within his own camp, it's almost impossible for him to keep any sort of coalition together, even with the center-right. So the options appear to be very, very limited. The only issue, of course, and that's also what political analysts have been telling us this morning, is that even if there are fresh legislative elections planned over the next few weeks, they will probably lead to a similar fragmented parliament with possibly the National Rally gaining seats and becoming the biggest bloc in parliament, but no majority in parliament still. So the options, again, are very limited for President Macron. And perhaps this idea of fresh legislative elections and perhaps even a resignation of President Macron are going to come back on the tables over the next few hours.
So we've been through Barnier, Bayrou, Lecornu. Who could be next, Caroline? I know that Madame Lagarde doesn't seem to be up for the job.
I don't think Madame Lagarde would be an option. I mean, she's pretty busy, I guess, at the presidency of the ECB, and she's also considered very center-right. So I don't think at this stage she would necessarily be the option. As I was mentioning, when we had the nomination of Sebastien Lecornu just 3.5 weeks ago, after the collapse of François Bayrou, we thought President Macron was going to go this time for a socialist prime minister. And clearly this is the only option he hasn't tried. And with the departure of the Republicans from this Lecornu government, clearly Macron cannot reappoint someone from within his own camp at this stage, because even the very fragile center-right coalition has today collapsed.
Caroline, if there was an election tomorrow, would it change enough within the National Assembly to give France a clear sense of direction?
No, and that's the problem. All the polls have been saying that perhaps the far left would lose a few seats, the National Rally would gain a few seats, but all in all, the parliament would still be fragmented into 3 blocks if you had fresh legislative elections happening tomorrow.
And in terms of, therefore, what happened, is there a sense that there is a way out? We talk about the fact that clearly appointing government after government is no longer tenable, and then the next logical step is French parliamentary elections. But if that doesn't produce a clear winner, a clear exit route from the current crisis, does Macron ultimately have to decide that he has to go? And I'm just wondering kind of what the French papers, what the French sort of thought is at the moment about whether or not that would be the kind of clearing mechanism in this process.
Yeah, I mean, clearly the resignation of Emmanuel Macron would be the next step, because at some point there is no way out. France has a parliament regime, even though there is a president in place. The parliament still controls the government and has the power, as we've seen over the past year, several times to make the government collapse. So if the parliament cannot have any majority, and if there is no coalition spirit really created in France, then clearly resignation of Emmanuel Macron would probably have to be the next step.
Caroline, thank you very much indeed. We'll probably be back to you very, very shortly as well as we continue to watch what is happening with French politics. We started the show this morning talking about the fact that politics is the kind of story at the moment. You look at what is happening in the United States. We have a government shutdown. We still don't know what the ultimate outcome of that is going to be. We're watching what is happening in France very carefully this morning. We've had breaking news there. We've had news overnight out of Japan. French politics is very hard to read at the moment. But in some ways, there's a big market reaction on the screen in front of us at the moment. Which one of these events, could one of these events kind of start to cause a more global
Exactly, but I think what we're seeing today is we've had two big moments happen in the same 24 hours, in the same 12 hours. These are kind of risk events that the market fears, that you don't just get Japan bonds blowing up, you also get OATs happening at the same time. I mean, gilts are rising in sympathy with this in yield as well. We're 6 basis points higher in the long end of the gilt market. The big worry for the market is the fiscal dominance moments happens all at once for those countries that the bond vigilantes have their eye on.
But it's kind of everything happens slowly.
Yeah.
And then it accelerates. And are we kind of anywhere near that acceleration moment?
But you're asking what is it going to take to force some fiscal responsibility? And in the UK, the situation with Liz Truss happened because you had LDIs, right? So surely you need to have that sort of idiosyncrasy in Japan or in France to force the hands of the governments there. That was what was unique to the UK to get that sort of market reaction.
Well, joining us now is Paul Dobson, Bloomberg's Asia Markets Executive Editor. Paul, thanks for joining us on this breaking news out of France. What, in your mind, is the big risk for the market?
I think, as you're discussing, people are worried about the back end of the yield curve and whether there will be demand there when people have all of these concerns about government fiscal irresponsibility, essentially. You're seeing it with France's yield premium over Germany widening out quite steeply. And as you said, the sell-off that we saw in Japanese government bonds earlier as well. And, because Japanese government bonds in particular are such a huge part of global bond markets, that sort of anchor, as we've talked about in the past, for global yields, as that rises, it pushes up yields everywhere else. We have Goldman talking about the knock-on impact from a JGB sell-off on US Treasuries and gilts and how they see spillover effects. Add into that as well more turmoil in France as well. You're getting a little bit of a difficult cocktail for bond investors to come to terms with. And, all of that turbulence in what is supposed to be risk-free assets is not good for the rest of the world either.
All right, Paul Dobson, we thank you for that analysis. We're looking at the CAC 40 down 1.8%, euro-dollar down 0.6% at 116. The French banks suffering, the likes of Crédit Agricole down 4.4%, same for BNP Paribas, SocGen down 5.5%, and the Oatsbrunt spread on the 10-year at 87 basis points now, Guy.
OK, let's talk about kind of how the connections work in these kinds of markets as we start to see politics really casting a long shadow over various asset classes. Bloomberg Senior EMEA Market Strategist Michael Masika joining us around the table. Your thoughts on this? Where are the connections now that we need to be looking for? Val talking about kind of the impacts of fiscal dominance and kind of whether or not we start to get cracks appearing. Are cracks appearing?
Well, look, to be honest with you, it was always a bit of a tricky situation here because you got a government that's been named, which is very similar to the previous one. So, I mean,
They asked for it, is what you're saying.
No, but so the expectation was that he was always going to fail, but he's failed very quickly.
He's failed a bit quicker than expected, let's put it this way. Now, having said that, if you look at the impact on markets, it's like indiscriminate selling. Once again, it's like you sell French assets, everything is gone. Like you sell LVMH. LVMH has no exposure to France. They don't care. So that's the kind of thing that's happening now. I think it's kind of a very excessive reaction right now. I mean, that government was, like you said, he was destined to fail anyway. Yep. But
does it just bring forward the risk of French parliamentary elections in which maybe you don't get a clearing moment, but you get a clearer indication of the fact that the far right is ultimately stepping towards the Elysee?
Possibly. The thing is, it's always difficult to predict what would be the political outcome here. But the thing is, the French government falling and this impact on market and the risk that was here, it was always like a very, very expected risk, I would say. It's funny because this morning, JP Morgan strategist came with a note saying, one of the big risks for the Eurozone was the French political uncertainty rising and the government falling. And at the same time, he said, if that happens and you get weakness, that's when you buy the market because peak uncertainty will be there. Yeah. And I think we're kind of in that situation right now.
Yeah, John Bilton was bullish on Europe earlier in the programme. This is a dip he might buy, perhaps. But, is this just noise? Do we just rinse and repeat? New PM every 3 weeks? He was 3 weeks, Lecornu. And then you just keep on buying dips. I mean, Guy keeps asking, what is it going to take, crisis-wise, to get the government to be fiscally responsible? How much more of a crisis could we see?
We'll see a bit of ups and downs, I think. I mean, obviously, we kind of the new Belgium. I mean, Belgium didn't have a government for a while back in the days.
It's going to really annoy the French to say that. I can't believe you said it.
So, it's okay. I don't think it's a huge problem for a lot of companies, especially for the CAC 40. Yes, domestic stocks will suffer, and people will keep avoiding them. Investors will keep avoiding them. But at the end of the day, when you have dips like that on like large caps that are mostly exposed to international revenues, then the dips will be bought.
Okay.
Paris just had a great fashion week.
Ending on a positive note, but should we recap some of the assets and the movements we've seen? We have euro dollar 0.7 weaker, CAC 40 down 2%, and my eye goes over to the bond market. We're seeing 8 basis points higher when it comes to that 10-year yield in France, way surpassing the 2 basis point rise in German 10-year yields. Well, that's it for the opening trade. This is a story we'll be monitoring for the rest of the session. The Pulse is up next. This is Bloomberg.